Cameron Brandt is with us, Director of Research at EPFR Global. Cameron, great to have you with us on the program. Good morning. So markets, of course, have been around the world, actually, have done quite well. US, of course, really the leader in that sense, despite last night's slight pullback. So, in a way, unbothered with everything which is happening with regards to tariffs, etc. There was that one-time shock around April, and the markets did dip quite a bit, but they're back. And how? What are flows telling you, Cameron, globally and specifically with regards to India?
So the flows are telling us that investors are certainly happy that this is the case, but they don't really have great faith in it. Certainly in terms of the U.S., they are not chasing the latest leg up in the market. Ditto for China, where the latest stimulus measures, monetary easing, has had no real effect on the sort of slow outflows that we witnessed for most of the year. Investors do seem to basically be positioning themselves for a reasonably soft landing. They're loading up on higher funds that offer exposure to higher yielding debt. I think the assumption is that those yields will go down as the US and other economies weaken. I think the main sort of note that I think may have changed a bit is that though markets are certainly behaving as if any landing will be soft, there seems to be a sense that once certainly the US economy has landed, it won't be a short turnaround time, that you could be in for a period of slower growth.
Cameron, hi, good morning. The markets are completely Good morning. They're completely unfazed, and that's the point you were just making, that a lot of the tariffs that have been announced in these letters, they're pretty similar to what was announced on the 2nd of April. But the markets seem to be comfortable, 25% for a lot of Asian trading partners, 35% for countries like Bangladesh. What's the sense? I mean, and data out of the US is still very, very positive. So is the market actually getting it right versus the economists?
Yeah, I mean, I think the market tends to react on what is rather than what might be the worst case scenario. And, you have the history of the first Trump presidency to sort of base, at least some predictions on. And that history is of fairly protracted negotiations that usually end up well short of the opening salvo. So no, that said, I do think that markets, I'm beginning to wonder what really will move them in a sustained basis. There's been a series of things from Iran and Israel exchanging missiles to the big, beautiful budget bill, which, if you're a deficit hawk, is not beautiful at all. And then, the markets get moved for, 4 or 5 days, even 2 weeks, but shrug it right off. So
Sure. But Cameron, on the flows, when all of this began in April, there was suddenly a big sort of chatter around de-dollarisation, moving away from U.S. assets, and we saw that play out in some of the Asian markets, for instance, getting more flows. What evidence do you have from the latest data in terms of just how is money moving, and if you have any estimates or projections of what we may see in the near term?
So, it continues to be mildly positive for India, which I'm guessing is what you really want to hear about. Pretty much since the de-dollarization theme emerged, dedicated India funds have really seen steady inflows, so that fell well short of the banner period between 2023 into last year. What I think is positive both for India and emerging markets is that investors are showing a preference for diversified exposure, especially on the equity side. Global equity funds have done well for a while, and we're starting to see a significant pickup in flows to the global emerging markets funds, which still have a very healthy allocation to India. You circle back to my earlier comments. What theme really is going to stick with markets? It seems even the de-dollarisation theme, for the moment, has run out of steam. But it's resonated enough that there's certainly been a modest but appreciable rotation towards the stronger emerging markets. India and Korea and Brazil, I think, have been the main beneficiaries of this.
Okay, all right. Cameron, great speaking with you. Thank you very much for your time. Appreciate your thoughts here on CNBC, as always.